So far, it's been a rocky start to the rollout of the Paycheck Protection Program. April 3rd was the date that the banks were allowed to open up the application process. Many of the larger banks were trying to set up their portal systems online to process applications, and only Bank of America was able to get theirs up and running. Many of the banks are only going to accept applications from their existing customers. Part of the reason is because they're going to be overwhelmed or feel like they'll be overwhelmed. And also it eliminates the risk of someone with fraudulent intentions of applying. If they're working with their known customer base, then it's less risky for them. Bank of America even limited the applicants to their customers that had credit cards or loans with them. They received a lot of negative PR for this, and I understand that they've opened up their application to all their customers the next day, Saturday morning. One of the reasons for the delay is the night before, this Thursday night, April 2nd, the SBA issued a final interim ruling which answered some of the questions that people had been raising about the program. But it also created some additional questions that many of the banks felt like they needed to have resolved. A lot of the banks had decided that they would not bring in applications because if they did, they would just be sitting in a queue and not process until they were able to digest the interim ruling. The SBA said on Friday that they had processed 13,669 loans for $4.3 billion. The total fund that was available in this program was $349 billion. However, Bank of America said that on Friday they had processed 85,000 loans for $22 billion. So that's just one bank. Of course, all those loans had not been forwarded into and processed by the SBA, but they soon will be. When the other banks come online, and I understand that JP Morgan Chase would probably begin Saturday, and a lot of the banks are working, so I suspect maybe next week they'll probably be up and running. So you can see that the demand is going to be fierce. And then the fear is if you're a small business, will you be left behind? Therefore, it's very important that you familiarize yourself with the application form and gather the supporting documents that you'll probably need. The application form is deceivingly simple. It's not that much to fill out. However, the devil's in the details. There's some calculating that you'll have to do, gathering some documentation. That's going to require the most time. And in this video, we'll go through that process. We'll talk about some of the areas that are still in question. We'll review the SBA's final regulation and some of the key points that were brought out or highlight, and we'll highlight those. My name is Scott Brumley. I'm a partner with Brumley, Robinson & Associates CPAs. We're an accounting firm with offices in Huntersville and Charlotte, North Carolina. So when you're ready to make the application, where do you go? Well, it's not like the economic injury disaster loans through the SBA. That loan program, you went directly through the SBA's website. Under the PPP Paycheck Protection Program, you applied directly through a bank, lending institution that is set up to package SBA loans in the past. Most likely your bank is, but that would probably be your first step, is to go through your bank first, because most banks are only opening up the application process to their existing customers. Bank of America was one of the first and only banks to open up their application process on the first day it was available, which was April 3rd. But here's the landing page of Bank of America, and you can see that to be eligible, you had to have a relationship with them, had an account established as of February 15th, 2020. Fifth Third Bank was quoted in Forbes magazine article that they made a decision not to launch their platform on April 3rd because they felt like they had lingering questions that they needed to have resolved first. And they didn't want to open up an online platform just to accept applications and have them sit in a stagnant queue, and no progress would have been made on them. And they believe that most all of their peer banks would join them in making that same delay for the same reasons. Here's a landing page at Fifth Third, and they're indicating that you have to have an online banking profile, which would indicate you would have a banking relationship with them. And it looks like they're telling you that it will be available online only and not at a branch or by phone. So when they are ready on their website, Fifth Third customers would be able to log in. So the only advice I would have is to try to check the website of your bank first to see if there's any application platforms that are set up to accept the application. And if not, call or email your banker. I know most of the bank lobbies are closed. They're usually only have drive-through option available because of the shutdown. And you can try calling or emailing, but my experience has been they are so overwhelmed because all their business customers are calling and trying to contact them at the same time. So, I understand they have a tremendous challenge, but there's a lot of frustration with a lot of businesses that were really felt like this was their solution to their economic crisis that they're undergoing, and highly anticipated the help ever since it was passed on March 27th. But the fear is that there is a large pool of money, but the fear is that their particular bank is not going to be ready in time, and existing banks customers will overwhelm the system and deplete the funds that were appropriated. And then if that were the case, then the only available option would be if Congress appropriated more money. I'll touch on that later in the video. And but your first step is try your local bank first. Here's the final application form. This is the prototype that was issued by the SBA and is what most all of the banks will be using. The banks can have this form formatted on their own form. It may be a little different, but these are the kind of the required bits of information that the SBA needs. And this form could be online, so you could be completing it online and submitting everything, or your bank could be just having you fill out a paper copy. They could be having you fill out this same form, or they may have a form of their own. You can get this form online by searching for SBA Form 2483 and download it. Just be sure that it says that the expiration date at the top right-hand corner is 9/30/2020. You can go ahead and download this form and fill it out just to make it easier that when you actually fill out the form the bank wants you to use, or if you're doing it online, you have most of the answers already there. This is the most important box that you'll be filling out on this form. This is what your loan is based on, and what they're asking for is the average monthly payroll. Your loan is going to be based on 2.5 times that amount. The remaining questions are what makes up the monthly payroll, what's included in the payroll cost, and for what period does it cover. Once you determine the average monthly payroll amount, you simply multiply that times 2.5. But if you notice in this block, they also say you add to that the EIDL. Now that's the loan that was made available earlier in March. And if you just recently applied for the emergency $10,000 grant, you were really applying for that loan. And that loan was supposed to be based on 6 times your fixed monthly operating expenses. but nowhere in the loan application did it ask for that amount. And I suspect that at some point they're going to be contacting those that applied to try to get that information to see how much, if any, of the economic injury disaster loan they would receive. And if you received it, then you can add that amount to the PPP, the Paycheck Protection Program loan, and combine them. So essentially you're refinancing them together. So one question you would need to make is, should you roll the EIDL into the PPP loan? Now, the EIDL loan has one advantage in that it has a longer term. That loan can be spread out over 30 years. The PPP loan only has a 2-year term. It was originally intended to have a 10, but in the final interim ruling, they stated that it was going to be for a 2-year period. They could always increase it, but that's the initial term as it stands now. Another reason for rolling it into the PPP loan would be that it could potentially, or some of it could potentially, be part of the amount of the PPP loan that's forgiven, because they cover the same types of expenses. And you can't use the same expenses for both the EIDL or the PPP. Rolling them together kind of eliminates that potential conflict. Another reason for rolling into the PPP is that the PPP loan starts out with a 1% interest rate, and the EIDL has a 3.75 interest rate. If you decide to roll it over, then that raises another question. What do we do now? Because no one that I know of that's applied for the EIDL has received their loan yet, or been contacted to find out the information to determine what that loan amount would be. So if you don't know what the loan amount is, then what would you put here? Will we be able to go back and amend the loan? If we start the process and we're awarded the loan, can we change it at that time? Or if we've already received our PPP loan and we later get the EIDL loan, can that amount be added to the PPP loan? I didn't see any of that addressed in the final ruling, and I'm not exactly sure where that stands at this point. And I haven't seen it mentioned anywhere what the process is for that. One caveat regarding this video is that this video should be viewed as just an introductory guide as to the application process and the rules that I know at this point. By the time you watch this, there may have been new interpretations or new guidelines that would make some of this obsolete. So therefore, I encourage you to speak with your banker that is handling the SBA loan and your CPA to see if there's been any changes in the current understanding. And this is also why the banks are delaying and having a hard time. They're trying to go through and trying to make sense of some of the conflicting statements that they've come across. This is another box. I'm not exactly sure. I initially thought this was just the number of employees that you currently had or had at the last quarter payroll that you would process. You're going to have to turn in 941s, and on the 941s, they ask for a number of employees on the 12th day of the third month. Is that the number, which I thought it probably was? However, when you go to calculate the amount of the loan that can be forgiven, they want you to calculate the full-time equivalent employees. So in other words, 2 half-time employees would equal 1 full-time equivalent employee. And if that's the case, do we go back over the period that you used to calculate the monthly average and compute the full-time equivalent employees? That makes more sense, but I'm not exactly sure. I think it's something that would be nice to be clarified by the banker or the online support if you're doing it online. But in reality, I suspect it's going to be too hard to get through in time to get someone that can answer that question. Notice at the top of the form, there's a place where you check what type of entity you are. And on the second line, there's two categories. One is independent contractor, and one is eligible self-employed individual. And both of those, most tax preparers would consider to be sole proprietors. So it's a little bit puzzling at first why they weren't just called sole proprietors. I think the distinction has to do with whether or not the sole proprietorship has employees. And if they do not, they can still count themselves as an employee, and they're using the net earnings of the business as their wage. And therefore, that's why they've been pulled out as a separate category. If you fall into that category, you should not be completing this first wave of applications. The first wave was for the entities on the other lines, the first, third, and fourth line. That process was to begin April 3rd. Independent contractors and self-employed individuals were to begin being processed on April 10th, a week later. That may be delayed since they're having trouble with the first wave. But if you fall into that category, there should be some additional guidance coming later. One of the things that you can do now is to gather the supporting documentation that the banks are going to require you to furnish. Gather your payroll returns, Forms 941, that's the quarterly federal payroll returns. Get it for all quarters for the period that you're using to calculate the monthly payroll cost. Also, get your state unemployment returns for each quarter, because that can be added to the payroll cost. Either from your payroll provider or your accounting software, run a payroll summary for the period covered by to calculate the monthly average payroll, and also a detailed payroll register for the entire period. And I would also get a transaction list and invoices if they're available for health insurance paid. Now, this is the company portion of health insurance paid. Likewise, a transaction list or report for the company paid employer contribution, not what the employee had electedly deferred, but what the employer matched, or the employer contribution. Get all these documents and scan them in case your bank is requiring you to upload to an online application. Or just have them printed if the bank is requiring copies of these. You also need these reports to calculate the monthly average payroll. This is the section in QuickBooks Online under Reports, down at the bottom under Payroll, the two types of reports that you will want to run. The first one is the payroll details, that's the payroll register, and also the payroll summary. So you want all the detailed checks, and you also want the summary by employee. Couple of tips when you run the reports. For the date range, choose custom if you're not using the last calendar year. The current guidelines suggest that perhaps you use the last 12 months. So that would be the second, third, and fourth quarter of 19 and the first quarter of 2020. Also, when you select employees, sometimes it will be just active employees. So make sure it says all, so that you are including employees that may no longer be with you. I find it helpful to create a worksheet to help you calculate what that average monthly amount is. Here's a worksheet that I use, and in this worksheet I list each employee, and I list their compensation, their health insurance, their retirement, state unemployment taxes, and total that for total payroll cost. And then you're only allowed to include the first $100,000 of employee cost. And so I showed the excess and it was allowed, and then divided by 12. Now, there's a little bit of controversy as to whether or not that $100,000 limitation only applies to compensation. And as when I first read it, that's the conclusion that I drew. It was just compensation, because the wording sometimes seems to suggest that it's compensation and then you're adding the benefits after. But in the rereading it through the spirit, I think, of what they're intending, I think their intent is that the $100,000 limit applies to payroll cost. Although I'm sure you'll find many other people that are still believe that it is just compensation. I chose to go the more conservative approach. I'm not exactly sure what would happen if, are they going to spend the time to go through and check on this before they process your application. And if they do, will that delay the processing of it? Would it put you into a pile where they have to go through and check it more carefully? One prominent law firm did a blog post, and they concluded that the final interim rule suggested that it was the $100,000 limitation was applied to all payroll costs, including retirement benefits. So that further confirmed the approach, more conservative approach that I took. Another decision that you have to make is what payroll period do you use to calculate this? And that's not a small thing, because you're basing your monthly payroll on this certain period, and the numbers are going to be different. It's just a question of, are you using the correct one? The Form 22483 clearly states in the instructions that you would use the 2019 calendar year. However, in the final interim rule, they stated that you would use the last 12 months. So I think there's conflicting information. The banks know that. I think the banks are trying to find out what the correct date should be. And that's one of the reasons that a lot of the banks were hesitant to open up the application process until they got that clarified. When Steve Mnuchin was asked about it, he referred them back to the interim rule, and the interim rule was the last 12 months. So if I had to submit my application today, I would probably use the April 1st through the March 31st. But I'm sure you'll find people that believe this 2019. So these are the types of decisions that you're going to have to make. It would be good if you can get clarification from your lender before you submit your application. But at this point, that's still a remaining lingering question that it would be nice to have resolved before you submit your application. You are only allowed one loan, so you can't go back and ask for an additional loan if you later find out that the amount you requested was too low. What is clear is that they do allow for a seasonal option. So if you're in a business that you have a seasonal type business that runs in the same time period that the disaster was declared, which is February 15th through June 30th, that's a date that they believe it will end, then you have the option of foregoing the 12-month period and using this period instead. So I have been using 4.5 as a number of months. I suppose you could use number of days. I haven't seen any guidance that talks about the number of days or number of months as the factor to use. So I think that interpretation is left up to you. I've used 4.5. And this is an option, so whichever one yields the highest payroll cost, then that's the one you would want to use. In this particular case, there were only 2 employees, and one of the employees was highly compensated over the $100,000. Therefore, there wasn't that much of a difference. In this case, he had a higher seasonal rate than the previous 12-month. But if you had a lot of employees that were not over the $100,000 limit, you could have a substantially higher loan cost if you're a seasonal business. Once you get this far, the rest of the application will go pretty quickly. Each 20% or more owner will need to be disclosed, and they will need to sign a certification. This can be done electronically if your lending institution is making the application available online, or the certification pages should be printed and given to each 20% owner to answer, and they each individually have to sign. So these are some of the questions that they are asking of the business and of the 20% or more owner. Of particular note down at the bottom, question number 4, has the applicant received a SBA Economic Injury Disaster Loan, the EIDL that we had talked about? A lot of people will have applied for both, perhaps. But as I stated, I know very few that have received their loan yet. So I would assume that you would answer this question no, because you haven't received it. You may have applied, but not received yet. And continuing on, these are the remaining questions for the certification part. And at the top of the second page, there are some additional representations and authorizations and certifications that are made. This is the top of page 2. And down at the bottom, there's additional certifications for the 20% or more owners to make. And these are to be initialed by each one for each 20% or more owner. And I just want to go through some of these certifications because I think it's important that you know what you're signing. So pay particular attention to a couple of key phrases and wording. So on the first one, the date, February 15th, is the date you had to have been in operation. And you had to have had employees that you paid salaries or payroll taxes. Second question kind of refers to the spirit of the loan, and it's because current economic uncertainty make it necessary to support the ongoing operation. So you need the loan to support the ongoing operations of the applicant, which is caused by current economic uncertainty. So when you're checking this, you're stating that that's the case, and that's the reason that you're applying for the loan. Here I've repeated the third question 3 times because I just want to kind of point out 3 key clauses of it. I think this is an important certification. The funds will be used to retain workers and maintain payroll. So that's the primary reason for the Paycheck Protection Program, is to help you retain workers and maintain payroll. Or make mortgage interest payments, lease payments, and utility payments. So in addition to payroll, there are other allowed expenses that it's intended for. In that category, the non-payroll category, they later specify that no more than 25% of the loan should be going for these non-payroll related costs. The last statement of this one certification is that you're stating that you understand that the funds are knowingly, if they're knowingly used for unauthorized purposes, then you could be legally liable for such charges of fraud. They want you to understand that you're going to have to furnish to the lender documentation verifying the number of full-time equivalent employees on your payroll, and the related payroll costs and other costs such as mortgage interest and rents and utilities for the 8-week period that follows the loan. So once you get the loan for the next 8 weeks, you need to keep track of the documentation It's for two purposes. One is just to submit evidence that you did use the money for this purpose and that it was intended for. But also importantly is those costs will, whatever they are, will that much of the loan will be forgiven, and then the remainder you would have to pay back. The second statement just is to let you make sure that you know that no more than 25% is for the non-payroll. So the payroll has to be at least 75% of the loan. And thirdly is just to make sure you understand you cannot apply for a additional Paycheck Protection Program loan. This next statement seems to be a little scary. If you as you read through it, you're certifying that all the information provided in the application is true and accurate in all material respects, and making a false statement to obtain a guaranteed loan is punishable by 5 years and a fine of $250,000. But if you're submitting it to a federally insured institution, which you are if you're going through a bank, then it could be up to 30 years imprisonment or a fine of not more than $1 million. I think this is primarily for people that are not the people that just make a honest mistake, but for people that are intentionally trying to fraudulently submit a claim that they're not entitled for. And lastly, the lender is just your understanding that the lender can share any of the tax information you provided with other authorized representatives that the SBA works with. Here are the instructions for the 2483, and a couple of key points that I noticed on this. In red, it said that most applicants will use the average monthly payroll for 2019. So here's what they're telling you to use the calendar year, but the final interim rule that was published on April 2nd stated that it was the last 12 months. So that's where the conflicting statements have occurred. But I think we would go with the latest interim rule. In blue, it talks about the amount that's over $100,000, and at the top it defines payroll costs, and it talks about it being compensation, and then it talks about the other items like health insurance and retirement and state and local taxes is also part of cost. And then they say that you're excluding cost over the $100,000. So that's where I interpret that to mean that all those costs are added together before you apply the 100,000 limitation. In the final rule, though, they do mention at one point they talk about compensation over 110,000, which leaves open the doors. Does that mean it's just compensation and the others are not? That didn't make it more clear to me. But from a conservative standpoint, I'm going with the total payroll cost. All of your employee compensation gets included in Medicare wages and tips. And if you're looking at a W-2, I mean that's what you're counting for your compensation for the purposes of the payroll cost as it's defined. Box 1 wages could be lower than that if you had a retirement account, a 401k, and those pre-tax items would reduce what's in box 5. But it's box 5 is what counts for the payroll cost. And Social Security wages is capped at a certain dollar amount. So even if you're over, you still count the total Medicare wages. Of course, it'll come back and be limited by the 100,000 anyway. But just as a point of fact, just use total compensation, the amount that would go in box 5. And on the 941s, if you notice on the worksheet, I was putting the amounts from the 941s. I'm getting that from the taxable Medicare wages on the 941. Included in payroll costs are state taxes assessed on wages. So these are employer taxes assessed on wages. So it's not going to be your federal FICA, Social Security, and Medicare, and it's not payroll taxes withheld. They're pretty much only talking about state unemployment tax, not federal unemployment tax, but state unemployment tax. So here's the form for the North Carolina quarterly unemployment tax return. And here you would pick up the tax due and break that down by employee. The report doesn't break that tax down by employee, so you have to look at your payroll register that you print out to get that information. But you would want to submit the state unemployment returns as support for the numbers that you put down. We finished the application, and now we're going to take a look at the interim final rule. This is the statement that was issued by the SBA on the eve of the application opening window when they were going to allow banks to first start accepting applications. So it came out late Thursday night, the night before the applications were to start to be accepted. And we'll go through and talk about some of the key things that are of interest, some things that were clarified, and then some statements that were made that made it a little bit more confusing. Following this release, there'll be a comment period where people will ask questions and try to get clarification on some of the items in here. So this says final rule, but this is not the end of it. There'll be more clarifications and modifications to come. Here's a section that talked about individual sole proprietors and independent contractors and self-employed individuals. And they talk about you're eligible if you're in operation by February 15th and you either had payroll or received a 1099 or you had income and expenses from a sole proprietorship. And for borrowers that don't have that type of documentation, you can furnish other supporting documentation like bank records, as long as they were sufficient to demonstrate the qualifying payroll amount. So what they're getting to is that if you are say a gig worker and you don't have any employees, then the net income of the business is your payroll. And you have to be able to furnish some type of information that could demonstrate what that profit would be. And like a highly compensated employee in a business sole proprietor that we just spoke about, is also their net income is also limited to $100,000 a year. That's as I'm pointing out in the red boxes. In the blue boxes, I'm addressing the area that talked about the period. So the steps in calculating your payroll costs is they wanted to total up your payroll costs from the last 12 months. So that's different than what they had stated in the instructions on the 2483. But also notice in item 2, step 2, you subtract any compensation paid to the employee in excess of the annual salary. So that's where some people are reading that to be that you're just talking about limiting the $100,000 compensation. I think it would have been a little bit more clear if they'd have put subtract any payroll cost paid to the employee. But they didn't, and I think that's one area that still has a little bit of confusion that they're going to try to clarify. The final rule addressed what qualifies as payroll cost, and it's to consist of compensation plus employee benefits. And for independent contractors, it's wage, commission, income, or net earnings from self-employment. Now, also included in the final interim rule was this section, and this gave me a good bit of concern when I read it, and also I'm sure it's one of the things that the banks felt like they needed to study it just to be sure they understood it, and was probably one of the reasons for the delay. This has to do with income taxes that are withheld in the definition of what are payroll costs. So what they're saying is that when you go to have the loan forgiven and you're counting up your payroll cost, you're not going to be counting the gross income, you're going to be counting the net check after taxes, because they are excluding from the definition of payroll cost federal employment taxes that are imposed or withheld during that period of February 15, 2020 and June 30, 2020. So that's the disaster period. And that includes the employer share, but also the employee share of FICA and income taxes required to be withheld from the employees. When I first read it, I was concerned that perhaps we had been including in payroll cost the payroll taxes and that they were excluded. But since it only seems to be the payroll taxes during this date, not the taxes in 2019, it appears that it was okay to go by the gross wages instead of having to exclude the taxes. But when you go to have the loan forgiven, you're not going to be able to count the taxes in the amount that's going to be forgiven. And part of the reasoning behind that is that essentially you're being forgiven of this money. It's not going to be considered income. The forgiveness is not income. But you're also not going to be able to count that as part of the amount to be forgiven. Because there was so much talk early about 1099 miscellaneous and independent contractors, a lot of people read into this that you included what you paid your independent contractors and added that to your W-2 employees. In the final rule, they clearly state that independent contractors do not count for the purposes of the loan calculation. And that's because those independent contractors are going to use their net income to calculate their own PPP loan amount. Initially, the loan was supposed to carry a 4% interest rate for a term of 10 years. The Trump administration stated that the interest rate would be 0.5% for a 2-year period. There was a lot of pushback from the banks that interest rate was too low to make it worth their while. And in the final rule, they stated that the interest rate will be 1%. And this was an article by CNBC that discussed that amount. The final rule also stated that you could only apply for one PPP loan. And that meant that you should consider applying for the maximum amount that you could. One thing that kept coming up in the final rule was that this fund has a finite amount, and also that it's first come, first serve. That indicated that they believe that the demand for the amount of funds is going to exceed what is currently in the fund. Donald Trump had stated that he would ask the Congress for more money if in fact, that the fund gets depleted. Also, Treasury Secretary Steve Mnuchin also addressed that confusion and frustration that borrowers were having and that there was such a high demand. And he tried to assure them that if they ran out of money, they were going back to Congress and ask for more money. However, that's not guaranteed. It takes Congress to make that decision. So there's no guarantee that if, in fact, it does run out, that Congress will agree to fund it with more money. It was stated that there would be no payments due for the first 6 months after the disbursement of the loan. Previously, it had said that it was anywhere from 6 months to a year. It also stated that no more than 25% of the loan forgiveness can be attributable to non-payroll costs. And just like independent contractors that the business pays do not count toward their loan amount, it also do not count towards their loan forgiveness. Here it shows what the PPP loans can be used for. And notice that in item 6, interest payments on any debt obligations that were incurred before February 15, 2020. I suspect that if you're counting that you may have to furnish loan agreements that show the date was before February 15th. it probably won't be enough to show that you paid debt during this time. It's that the payments were for obligations that were entered before February 15th. And to prove that, you'll need a loan agreement. Same with rent payment. So if you don't have a rent agreement or a loan agreement, then you should probably try to obtain one now, because that's probably going to be a requirement when you go for the loan forgiveness. The interim rule also spelled out that if you knowingly use the PPP funds for unauthorized purposes, not only will they direct you to repay it, but if you knowingly use them for unauthorized purposes, you could be subject to charges of fraud. And remember, that was one of the things that you were certifying in the certification. So that's probably not something that's new, but just to kind of re-emphasize that that's a possibility. So you don't want to take the funds and then just take it out and put it in the stock market and not use it for the intended purpose. Lastly, I want to discuss some other CARES Act relief provisions to employers and how they relate if you apply for and receive a PPP loan. The first one is deferral of employer Social Security taxes. So there's a provision that you can defer your employer portion of payroll taxes for 2 years. However, if you participate in the PPP loan program, that option is not available to you. If you had more than 100 employees or less than 500, you may have had to pay for sick and family leave. If you did, there are tax credits to offset that cost. And you can still participate in the PPP loan program, but you cannot count those wages as part of your loan cost to get your loan amount, since you're going to end up getting a credit for it. And lastly, if your revenue significantly decreases compared to a previous quarter, there's a tax credit of up to $5,000 you can take on your 941 employer quarterly return. However, if you participate in the PPP loan program, that credit is unavailable. Again, my name is Scott Brumley. Thank you for watching the video, and I wish you and your company much success in getting through this pandemic. Thank you very much. Bye-bye.